Good morning, ladies and gentlemen. Welcome to the Dodla Dairy Q3 FY22 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities Limited. Thank you, and over to you, sir.
Thanks, Lizan. On behalf of ICICI Securities, we welcome you all to Q3 FY22 results conference call of Dodla Dairy Limited. We have with us the senior management of the company, starting with Mr. Sunil Reddy, Managing Director, Mr. BVK Reddy, CEO, and Mr. Anjan Ganji, CFO. Now I hand over the call to the management for their initial comments on the quarterly performance, and then we will open the floor for question and answer. Thanks, and over to you, sir.
Thank you very much, Aniruddha. Hello, everybody. I welcome you all to the Q3 22 earnings conference call of Dodla Dairy Limited. As usual, I hope all of you guys are keeping safe in this COVID-induced tumultuous environment. I'm very glad to announce that we have delivered yet another quarter in line with our stated goals. Our milk volume grew, and healthy VAT numbers have also buoyed and helps us to achieve a 16% year-on-year and 2% quarter-on-quarter revenue growth.
Sorry to interrupt. Sir, the audio from your line is not clear.
Is it okay now, ma'am?
No, sir. It's still the same.
Is it muffled or?
Yes, sir. It's sounding muffled.
1 minute, ma'am. I'm just I don't know what happened. Is it okay now?
Sir, slightly better. Please proceed.
Okay. Is it better now?
Yes, sir. This is much better. Please proceed. Thank you.
Okay. I'm glad our VAT numbers have buoyed us to achieve a 16% year-on-year and a 2% quarter-on-quarter revenue growth in the third quarter of 22. Our average milk procurement in Q3 for the year 22 has increased to 12.4 lakh liters per day as compared to 10.7 lakh liters the same quarter last year. Geographic expansion of our operations and inroad in new markets are visible through growth in the numbers of our facilities and direct and indirect distribution channels. Having said this, I'm pleased to announce that we have achieved a milestone of 1 lakh litre per day of milk procurement from our newly entered state of Maharashtra in the quarter gone by. Our growth in the top line and bottom line has been in line with the industry standards. We saw healthy numbers in our VAP sales despite seasonality this quarter. Typically, what happens is when the onset of winter, sale of products like curd, lassi and buttermilk, flavored milk and ice cream are subdued as compared to the summers, as people prefer to have hot beverages during that time of the year. As you all know, that our commitment towards ESG and a strong conviction towards the fact that fundamentally strong companies which have a sustainable business model will always outlast the competitors and can become long-term success stories. We are taking every step in this direction and want to establish a name among these high-growth yet sustainable businesses. Steady transition towards renewable energy like solar. We have successful installation of zero-discharge plants in the past 2-3 years, and supporting our dairy farmers by providing them high-quality feed, paying them directly on time, are the few steps that we have taken to build a strong and sustainable ecosystem around us. I also would like to take this opportunity to reiterate the fact that with a strong execution team, experienced professionals and a very strong balance sheet, we are on the road of becoming a formidable dairy player in the future. With this brief, I'll hand over to CEO of our company, Mr. BVK Reddy. Over to you, sir.
Thank you so much, Sunil, sir. Very good evening to all the participants. As I mentioned by our MD, sir, we have delivered a healthy quarter showing growth in revenue and other parameters. Our constant push towards expanding our footprints across India is shaping up well. As you all know, our company core is built on the solid and long-standing relationship that we have had with our dairy farmers over the years, which in turn has strengthened our procurement model. Today, our procurement milk around 1.3 lakh dairy farmers as against 1.2 lakh the same year of the second quarter, of which 81% are provided with the regular direct payment in bank accounts. Our direct procurement model has further strengthened, wherein we are buying almost all the milk directly from the farmers across more than 7,800 villages, as compared to 7,600 villages in the Q2 of 22, resulting in cost saving, establishment of deep-rooted relationship with them. Our orga feed operations, wherein we have provided high quality feed to the dairy farmers, help us strengthen these relationships with them. And this also ensures that both the parties get benefited. In terms of our presence, we continue to have a third highest market presence across 12 states in India, supported by 3 largest procurement network, 14 processing plants with 20 KL lakh liters per day capacity. We currently have 104 chilling centers as against 103 in previous quarter. As Mr. Sunil sir mentioned earlier about our growing operations in Maharashtra, wherein we have touched 1 lakh liters per day mark of milk procurement, is a good example of this growing presence. Today we have around 546 Dodla parlors as against 509 in the previous quarter. And we also have a strong 1,718 milk and milk distributor channels, which was 1670 in the last quarter. We have 3143 distribution agents network that are all well established in many areas of the country. We continue to strive our enhancing our footprints and brand visibility with every passing year, and we are making constant efforts to expand our distribution network, strengthen brand recognition, and improve our margins to power unmatchable growth in the industry. With that said, I would request our CFO, Mr. Anjan, to give a financial overview of this quarter.
Thank you, sir. Good morning, everyone. I would like to briefly touch upon the key performance parameter for the third quarter of this financial year 2022. We have also submitted a detailed presentation of our quarterly performance on the stock exchanges, and we have also uploaded the same on our website. Now, taking a quick glance at the financial highlights for the quarter ended 31st December 2021, our operating revenues were at 5,752 million this quarter, as compared to 4,972 million in Q3 financial year 2021. Revenue from value-added products and fat-based products was at 1,380 million INR, contributing 24.2% to the overall dairy revenue during Q3 financial year 2022, compared to Q3 financial year 2021. The same stood at 1,143 million INR, contributing to 23.1% to the overall dairy revenue, so which is a 1.3% increase. EBITDA stood at 520 million INR for this quarter, compared to 703 million in the same quarter in the previous year. The EBITDA for Q2 FY22 stood at 619 million INR. Profit after tax was at 269 million INR this quarter, as compared to 416 million INR in the same quarter last year. For Q2, the same PAT was at 294 million compared to 269 million this quarter. EPS for this quarter stood at 4.5 rupees per share, as compared to 7.5 rupees the same quarter last year. Discussing briefly about our margins, I would like to reiterate what we have discussed over the past few quarters. Our operating margins may appear to be subdued vis-a-vis the same quarter last year. This is primarily due to the raw material cost softening benefit that we got last year, which was expected to stabilize this time around. Having said that, I would like to mention that we are confident that this will be offset partially by the price increases going forward. With our increasing footprints across India, growing numbers in Africa each successive quarter, and resilient VAP sales and pricing power, we are confident of achieving our year-end margin targets. And as Mr. Sunil mentioned, we are becoming a formidable player in the dairy industry. That concludes our update on the finance and strategy, which we believe has been positive in all aspects. With that being said, we would now like to open the floor for questions and answers. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, my first question is with regards to the margins. I mean, the gross margins particularly. So while I understand, that the base quarter had a very high base in terms of margins and it was expected to decline. But even on a QOQ basis, if you see the demand, the decline has been quite sharp. So any sense that you can give how much the procurement prices has risen QOQ basis and how much, the selling price has risen? Any sense on that?
So I'll first take the general thing, Gaurav, and then Anjan will answer in detail. So basically what happens is normally the months of October, November, December, we do see a softening of volumes which is not in norm, and you have a surplus of milk production. This year the surplus of milk production didn't happen, but the consumption was a little bit subdued as per the season. Anjan will give you the exact increase in terms of the per litre cost that is incurred because of not having the flush in the current season of October, November, December. Is that Anjan?
So for the previous quarters, for the quarter ended June 21, the procurement prices stood at 31.1 rupees per litre of procurement of milk. Whereas in September, quarter ended September 2021, it is 30.7 rupees per litre of milk procured. And for the current quarter, the procurement price stood at 32.4 rupees per litre of milk procured, so which is a 1.7 rupee increase compared to the previous quarter and 1.3 rupees compared to the previous quarter before that.
So that price increase we are trying to accommodate by waiting and taking a selling price increase which will be happening in the current quarter, which will stabilize our margins.
Okay. Sure. So in that sense, I mean, how has been the current milk prices been trending in that context? I mean, I do understand, that the Q3 would have been seeing also a lot of pent-up demand from the HoReCa channel after opening, and there would be a higher demand versus the supply that you might have faced, and because of which the RM prices would also shot up. But how is the current quarter trending, given the fact that Q4 is generally a lean season in terms of pricing, and what sort of a quantum of price increases that you are envisaging?
Yeah, BVK will answer that, Gaurav.
Yeah, Gaurav, this is BVK again. So in December, we went up to 32 rupees 40 paisa. Even January, maybe another 30-40 paisa it is going to go up. So it is already gone up close to 33 rupees now. But in the January we have taken across all locations, we have taken a price hike, also selling price hike by 2 rupees. So this will offset.
Okay. And sir, this price increases, have you only taken, or you have seen your competitors also taking a similar kind of a price increase?
It's basically a mix, right? The different competitors will do it at a different quantity, different price structures. But we have made sure that we have taken our price structure according to our.
Yeah, we have done all the location across all locations.
Yeah, no, sir. But the reason I was asking was because if we take a price increases with the competition higher one, so can that eventually lead to an impact on the sales demand?
Yeah, but demand might have a small drop, but coming back to summer, we are expecting that it will pick up because we are confident that the quality of the milk and the brand loyalty that we command, the volumes will come back. It's a normal your 10-day kind of a scenario when everybody tries to find their feet and it will come back to normal.
Sure, sure. And so my second question is with regards to the African subsidiary performance. I mean, the performance seems to be quite good in this particular quarter, and there seems to be quite a sharp jump in the sales. So anything that you would like to highlight? What has led to this strong performance, and is this sustainable going ahead?
So I'll just give you the brief. I think BVK can take you through the numbers. The strong performance has been that we have improved our sales in Uganda itself. We manufacture in Uganda, sell in Uganda and Kenya. Now, actually now our Uganda focus on sales in Uganda has paid off, and we have a strong increase of sales in Uganda, and this will continue because now it is a better fact for us that we don't go across the border or in other issues. That is the reason for the strong performance, and we're hoping that this will continue. And if we can do something in Kenya at a later stage, we'll also try to further increase our volumes in Kenya.
Okay, sure, sir. Thank you. That's all from me.
Thank you, sir.
Thank you. The next question is from the line of Vineet Bhatt from Aput Partners. Please go ahead.
Hi, thank you for the question. My question, sir, is that in India, how has been the flush season this time? And regarding the skim milk prices, could you talk about the industry a little bit, that how much has been the stocking and what is the current price of skim milk powder?
Yeah. See, this year, skim milk right now prices are going around 235 to 240. And, we have enough stocks for the coming season.
Regarding the flush volume, this time there's been no flush. That's why you saw the price uptake.
Yeah. There's no much of flush.
Alright, any particular reason for that this year?
I think it is mostly due to the last time COVID when the calvings had happened, the timing going wrong in terms of insemination, followed by the incessant rains that we had with the monsoons that came in, like Tamil Nadu got hit for us with huge amount of monsoon rain. And that was the reason for major reason. One is the insemination and second is the monsoons, which normally incessant monsoons tend to bring a little bit of disease on, which takes some time for it to get corrected.
Got it. And just in terms of your value-added products, right? Like, so could you tell me how large is your ice cream sales and how has that performed to the pre-COVID levels, say 2 years ago? I understand that December is a slightly lower season for this, but just in terms of growth, how has that performed?
Ice cream for us was just something which we started only just before COVID as a full-fledged operation. So, but Anjan will give you the specific numbers of ice cream, which is a smaller component of the overall. So, Anjan, can you tell the numbers, Anjan?
So, previous year we were selling around 1,356 liters per day in terms of ice cream sales. This year we started selling around 1,854 liters per day, the ice cream sales. So the net revenue contribution is around 81 crores per day. 81 million.
88 lakhs. Yeah.
81 million. All right. Thank you so much, sir. I'll come back in the queue.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Vinod Malviya from Union Mutual Fund. Please go ahead.
Yeah, thank you for taking my question. Just a couple of questions. First is on the margin side. You have given some broad idea about it, but just more from a longer term perspective. Now, in your domestic operation, what has been observed, before the COVID hit us, you used to make around 20 to 21% kind of a gross margin. When I say gross margin, it's revenue less the raw material, which definitely increased during the pandemic period of to almost 30% plus. Now in this quarter, you have come back to 26%. So, on a long-term trajectory, maybe like a 3 to 4 years kind of a perspective, what should be the right gross margin or a right spread, that is the milk selling price less the milk procurement price? What should be the sustainable number for the company or for the industry as a whole?
So for the company, I would say that we will maintain this 26-27% gross margin, and we're trying to reach the 9 to 10% double-digit EBITDA margin, and that I think is the way we take it forward. Keeping that in mind, is what we take our price increases or are doing our operational parameters. Like I keep repeating, it's a call we have to do as a trade-off between volume and margin. So this is the margins that we look for, and based on that we fight for the volumes.
But compared to pandemic, I mean pre-pandemic, what has really changed, and what gives the confidence that now you would be able to sustain this kind of a margin, 26% compared to 20-21% what you used to do earlier?
So, it's basically the price increase that we have taken as an overall increase of the 3% of what we are getting from the sales to the procurement. We are only consistently keep on pushing for that margin profile now. So that might have an impact on a small percentage drop in our revenues, which we are trying to compensate by going into other areas. So that is the reason. It's simply the procurement to the sales price, what we are pushing in the market, and a lot of effort that we have put in the back end for improvement of quality, the visibility, the DRPs, all these are paying us now. So when a consumer is buying it, he is preferring the quality, and the strength of the brand is now coming forward.
Okay, and what about the competition cooperative? Have their profitability also gone up, and they are going to stick with the new profitability level, or there could be some reduction from the cooperative?
Cooperatives, I don't think so. So they're still maintaining the same number of what they were doing as the old number. But it's not being much. I don't think I'm not sure the exact numbers, but I don't see much change on the front.
Okay. And the second question was on your Africa business. Now, if you can correct me, if I remember rightly, during the IPO meet, you had said that your strategy as far as Africa is concerned, you will not really try to grow that business, and the focus would be more on generating cash and utilizing that cash itself. Now, in this quarter, there is a very sharp growth which we have seen in the Africa business, and you rightly said it's because of the increased operation in Uganda. So just wanted to understand, is there any change in strategy over there, or you can just highlight what has really led to this kind of a growth in Africa?
So basically, our strategy in Africa will remain same. Whatever cash is being generated there, if you get a smaller opportunity of strengthening our operations on the ground, like example in Kenya, if we can get an opportunity which will strengthen our operation is what we look at. Nothing as a major expansion goal, but this volume growth is something we still have capacity with us. We try to keep pushing to use our regular operations of improvement in regular operations.
Okay, and this last question on the domestic piece again. In terms of your geographical expansion, can you just give some strategy over there, like which are the new geographies you're planning to enter, or there is significant headroom in terms of improvement itself, growth itself?
In geographical expansion, we have done a substantial expansion in entering into procurement into Maharashtra, where we have also got around 1 lakh liters of milk coming in from Maharashtra now. So that is the strength that we have in terms of being able to go into areas where it's more cost effective, where we are able to implement our own system of direct to farmer. And that is one thing that we have done, is we have entered Maharashtra in a larger way for procurement. I think we will continue to concentrate on that improvement of procurement coming from Maharashtra for us. Regarding markets, it will not be anything for the current year other than strengthening in the areas where we exist, and maybe the peripheries of where we are operating from. So that will be our immediate goal for the immediate future. But we will definitely improve our procurement as we go forward in Maharashtra.
Okay. That's all from my side. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Pranjal Garg from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Good morning, sir. Sir, I have a couple of questions. First one being, as you highlighted, that Africa business have grown this quarter. Sir, is there a number in our mind that, let's say, the total contribution, the total sales, let's say, is there a number in our mind that this is the maximum we want our revenue from the international business? Let's say this was 7.5% in this quarter. Is there something like that?
There's not a specific number, but we would definitely like to push it and take it up to, let's say, maybe it will increase by a percentage or two as the contribution of revenue to our overall business as we go forward. Again, as we said, I think it is all due to us keeping a sustained quality. Whatever we are able to push, consumers are buying because they prefer the product as a product of choice now. and that leads to natural growth. So we will keep pushing that. It will not be a substantial growth, but it will definitely add increase of a percentage or two to the overall revenue.
Okay. And sir, can you please share the differential in the operating margins between our India business and outside India business?
Yeah, I'll just give you you want the gross profit, right? Or the EBITDA margins?
Yeah, EBITDA margin should be fine.
Okay. The EBITDA margins from
Anjan, yeah, this is Anjan. In terms of gross profit from Indian business for DDL India, we made for the Q3 2022, our gross margins stood at 26.1%, whereas our Singapore at a console level for African business stood at the gross profit stood at 32.8%. Coming to EBITDA, India for this quarter we made 8.2%, whereas the Africa business contributed 16.2% EBITDA.
Okay. Okay. Thank you, sir. That helps. I will get back into the queue if I have any follow-ups.
Thank you. The next question is on the line of Rohit from White Oak Capital. Please go ahead.
Hi, thank you, and good morning, Sunil, BVK, and Anjan. Just a quick question on, you spoke about taking your procurement in Maharashtra up further. So if I look at, your milk procured in the last 2 quarters anyway has been meaningfully ahead of, what you've been able to sell. So, what are the benefits right now, and your procurement prices have also gone up. So while you've done a commendable job in terms of, setting up your procurement network in Maharashtra, what benefits are you seeing from this? I mean, your sales volumes, and if I go by what you suggested for fourth quarter, again, volumes are likely to stay flattish or on the weaker side. So what benefits are you getting from this push in Maharashtra?
So, morning, Rohit. Very pertinent question. Maharashtra is a cheaper source for us in terms of landed cost for our North Karnataka operation and our Hyderabad operation. It is normally compared to, let us say, our highest in terms of other areas of where we procure, we benefit around 2 rupees from our Maharashtra operation.
So despite that benefit coming in, your spreads in terms of, selling price minus cost of procurement, they've been under pressure. So when do we start seeing the benefit of all this, investment that you've done in Maharashtra? By when? Do you think they should start showing up in 6 to 9 months from now?
It will start moving up in another 3-4 months. We'll start getting the benefits as more down now, because the same procurement price parity, we have also increased our selling price. So you will start seeing the benefits of this coming up as we go forward in the next 2 quarters. It will make our improvement from the previous quarters and move forward to better quarters.
Because this last year, February 16th was our first chilling center we opened. Right now, only 6 chilling centers are running, and the 3 are in pipeline. By 31st March, another 3 we are going to open. So next year, it will add on. The volume, it will become double.
Because now whatever we have reached is only as a progressive volume. Yes. Some of the volume will come forward now.
Very well understood. Just a quick second question, sir. If you could talk about our volumes, both on liquid milk and, let's say, 3 components, liquid milk, curd, and other VAP, compared to the same quarter pre-pandemic. So versus Q3 FY20 levels, have we started seeing some growth? Because now, all your segments, whether it is household or HoReCa, right, are all open. So this last quarter was pretty much as close to normal as we have seen in the last, since the pandemic. So how have volumes been?
Basically, the B2C, our impact of HoReCa has been marginal. But Anjan will give you the specific numbers of our comparative quarters for milk and the VAP breakup. Anjan?
So milk in Q2 in the last quarter of the financial year 2022, we sold around 9 lakh liters per day in terms of milk, whereas the value-added products we sold in India business, and value-added products we sold 257,000 liters per day. And in the Q3 2022, the milk sales stood at 9,11,000 liters per day, and value-added product sales stood at 2,42,000 liters per day. So overall for the dairy India, so we sold around 11.6 lakh liters per day, the same 11.6 lakh liters per day in the Q2 FY22. Whereas our African business, so we sold last quarter 63,000 liters per day, and this quarter we sold 88,000 liters per day.
Sure. So, can I, is it a fair question to ask that we should have perhaps seen some growth in volumes on a 2-year basis versus the third quarter of fiscal 20? Why has that not happened? Has there been no growth at an industry level, or have we lost some share?
We've not lost some share. Basically, again, the same Omicron bad weather story that comes up as insistent rain is the reason the cyclones that we were consistently we've lost 30, 40 days in terms of most major areas getting hit by cyclones, movement getting interrupted. That is the only reason we've not lost market share. It was a general drop. I think as we go forward, once the summer comes back into play, temperatures go up, we should see the numbers surging up again.
It is majorly in the November month we had a huge monsoon. So in the southern part of India, so Tamil Nadu, Andhra and Karnataka, some parts of Andhra Pradesh and some parts of Karnataka, hit by these monsoons, heavy monsoons. So that's where the demand went down. So other than that, we don't see much of an impact on the market share.
So would it be fair to say that you saw some growth versus 2 years back in the months of October and December? It was really the rains in November that impacted volumes?
Yeah, the rains in November did impact volumes. So that's the average to get hit a bit. And now we are again with Omicron, like for example, Chennai every weekend we get hit by a certain amount of volume. But I think this will all sort out by itself from Feb and March onwards.
Yeah, lowest volumes recorded in the month of November.
So for the yeah. Rohit, if you see the same quarter last year, we were selling 10.4 lakh liters per day. And this quarter we sold 11.6 lakh liters per day in India. From Q3 last year to Q3 this year.
Most certainly, but last year you did, Horeca was not completely open and hence the comparison perhaps is not that valid. Last question, Sunil and DK for you. How do you look at Amul's entry in AP and Telangana, the big plant that they are setting up? But does it change competitive dynamics?
So Amul is there in Telangana since 6 years, sir, not now Amul. Amul is there. Amul has been selling since more than 5 years in Hyderabad city. So there is nothing new. We need not worry about that.
So what they're saying, their own plant to getting a plasma.
Yeah, maybe already they
will not make much of a difference.
They are already getting co-packing. So instead of doing co-packing, they may go for their own plant. I mean, that also it will take another year or two to build their own plant.
Sure. So what you're suggesting is their own plant will only replace the current co-packing volumes. It's not going to lead to any incremental capacity in the market overall.
I guess they won't have to be dependent on co-packers. That is costing more than the volumes or whatever, because now they've got a reasonable sale volume. So depending on others, they'll try to improve their margin by going for their own plant.
Well understood. Thank you very much, gentlemen.
Thank you.
Thank you. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good morning, sir, and thanks for the opportunity. So this 2 rupees price rise which you are going to take, so this will help you to achieve again double-digit kind of an EBITDA margin?
Yes, sir. That's the reason that we are trying to keep our pricing at that.
Okay. And so what is your overall outlook for the milk procurement price for next year, FY23?
FY23, now we have to look at it mostly from the point of view of April, May, because that is the period again when we enter into the lean period where the price, we have to gauge how much will the lean period be. But I think with this price increase, we are prepared even for that couple of months of, if there is even a price increase, the following months when the prices do drop, we should be able to compensate and maintain our margin.
Okay, and sir, how cheap is the Maharashtra procurement price as compared to the other south regions?
See, for us, landed at our plants of operation, we get a difference of 2 rupees because it's also the distances from where we have started our new operations of North Karnataka to Hyderabad or Northern Andhra Pradesh. So the movement-wise and all put together, we save 2 rupees that landed at the plant.
Okay, and sir, what is our market share in South India and the revenue mix from South as well as non-South states?
Milk for us, we only sell in the southern states, sir. So that briefly, Anjan will give you the numbers of the market share specifically. Other states, we only sell our long shelf life products. We don't sell much. So milk in the southern states market share, Anjan, can you go ahead?
So I'll let you know what is our contribution of overall revenue from each state. So AP contributes in quarter 3 2022. So AP Andhra Pradesh contributed 34% of the volume, and Karnataka contributed 40% of the volume, and Tamil Nadu 16% of the volume, and Telangana 10% of the volume in terms of volume. in our to compared to the overall volume of the Dodla dairy.
So you said that value-added product we are just selling in the non-south region, and only milk is being sold in the southern state.
No, products we sell also in the southern region, but we don't sell milk in the northern region.
Acha, okay. And so what? Okay, got your point. And so what is the overall target to take this value-added product as a percentage of revenue in, let's say, next 2 to 3 years? Any target for that?
For the comprehensive target for revenue from the states you're saying, or?
No, from the value-added product, but overall value-added product, sir. Because I know that is the high margin business for us.
We will go up by 1% or 2, sir. It all depends on, again, hopefully, COVID doesn't rear its head up in the summer months, because summer months contribute a lot for our entire years of product revenue, from ice cream to flavored milk to all our fermented products. So we think we'll go up by 1% or 2 from the last year, sir.
Okay, but sir, any long-term target, sir? Any long-term target? Maybe not immediate target.
Long-term target is basically we keep pushing for trying to increase it year on year, sir. But it is also a product profile which I personally think it will not be something dramatic of increase, because overall consumption pattern, if you look at it from an Indian consumer, in the milk field, it is still that only, I think, this is my estimate, not a general estimate, there should be around 30-35% is what a household will consume, 30-31%, 32%. And I think when we are already coming closer to that is where our numbers will be, sir.
Okay, got your point, sir. Thank you so much, sir.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Pranjal Garg from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity again. Sir, I have regarding the Dodla retail parlors, we increased from 509 to 546 in Q3. Sir, in which particular geographies have we done this expansion?
Across all geographies. In all geographies, it's been a number that we are increasing. So we're going to use this to grow in all geographies, not as one. So I guess if you divide it as the states, the lead will come from Hyderabad city, but otherwise all states we have been increasing, sir.
Okay. And so, what is the average revenue from a 1-year running parlor? Actually, I want to understand the growth which can be achieved with the expansion of these parlors.
So I think they're contributing revenue-wise. Now they're contributing 12%. Sir, parlors are contributing 12% to the year-on-year. I think we'll push forward for 15-16%.
Okay. And sir, can we get an indicative number what a 1-year running parlor gives in revenues? Average number?
Each parlor-wise, you mean average parlor-wise, sir?
200 liters, 250 liters.
So we look at it as BVK will say that we target a parlor to achieve us around 250 liters of milk sales per day. That is our primary objective, followed by the value-added products that they add on to it. So an average running parlor is 250 into, let's say, 50 rupees or whatever the average realization per day, sir.
Okay, sir. Next is, what is the geographical mix of sales for the quarter?
Anjan, the geographical sales for our contribution, Anjan will just tell you so I can. Yeah.
So the geographical wise for the quarter Q3 2022, the revenue from Andhra Pradesh contributed 36%, Karnataka contributed 35% revenue, Tamil Nadu contributed 17% revenue, and Telangana contributed 12% of the revenue for this quarter.
Okay.
And for YTD, AP, Andhra Pradesh contributed 38%, Karnataka contributed 34%, Tamil Nadu contributed 17%, and Telangana contributed 11%.
Okay. Thanks. And sir, did we do any relaunches of products in this quarter?
No launches or relaunches, but we keep pushing all our products. I mean, the SKU variants do keep changing, nothing specific. I mean, for us, we still consider ice cream as a whole as one part of it. There will be a few flavors and variants that we push, nothing major.
Okay. Sir, my next question is regarding, can you please give us a guidance of targeted margins? What does the company wants to achieve?
So the targeted margins, as we said, so we will try to achieve or maintain a double-digit margin, moving from the lower, from the single digit or that 6-7% that we were in. We will try to move to the 9-11% margins.
Okay. Okay. Thanks, sir. That's all from my side for now.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Vineet Bhatt from Upward Partners. Please go ahead.
Hi. So my question was again regarding the skim milk prices. Now, I just wanted to get a sense of the prices in India versus international prices. Now, if I look at the international skim milk prices, they are significantly higher than they are in India, and this is not usually seen, right? So I'm just wondering, why aren't Indian dairy companies exporting more of the SMP to just enjoy the higher realizations that are there globally, as opposed to the prices in India?
So basically, sir, for us from India, we are basically a net buyer, or we use only for captive. We've never been in the milk powder sale. But international prices also, because of these vagrancies of not having freight prices going up, and a lot of the issues, the prices have gone up. In India, it is protected by imports also. So when international prices do come down, they have import duties which make the prices be higher. And since we are not consistent exporters, we only do at some specific time, it's very difficult for an Indian company to establish permanent powder sales globally. Because the government of India in the past has banned a couple of times when India had a shortage of milk. So people do not trust in India as a sustainable supplier. This is my opinion, sir. And also we have issues on terms of quality front. They'll want, when the prices are low globally, they'll not accept Indian product by claiming it to be quality issues of foot and mouth, we need certificate. And like now when the prices are high, you might find a little traction. But there is nothing consistent. That is why Indian powder exports do not move forward. Amul pushes it also, but pushes it as a commodity. Amul has never pushed it as a consistent supply outside globally.
Because they're getting incentive.
So whenever India is pushed outside was when there was a circle in the country, when the government gave incentives, was when we saw major push of powder going outside. But otherwise, it's a majority sold domestically.
And right now, so you're saying that there is no surplus SMP in the market, is it?
No, there is always SMP will be there, sir. As I said, as a commodity of pricing. The pricing impact will actually feel in March, April of SMP, right? If there is severe shortage of milk and consumption doesn't go up, consumption of milk goes up, then you'll find this stiffening. But if the consumption of milk doesn't go up for whatever reason and maintain status quo, the milk powder prices will remain the same.
Got it. So, and my next question is on the milk fat prices. Could you just help us with that as well, the current trend in that?
Could you come again, sir? You muffled a bit.
The milk fat prices.
Milk fat prices. The ghee prices, sir, again, we don't buy. We only sell our ghee in terms of the consumer market, and we are not buyers. So our consumer price will be now in the range of, what are we selling our ghee at? 450 rupees to 475 rupees. I'm not sure, sir. We'll get back to you, but around that range. We sell only as whatever little surplus there, we sell as consumer ghee.
Yeah, very small quantity, sir. 380 rupees per liter.
Sorry, 380 rupees per liter.
Okay, got it. And just to confirm on the ice cream volume that you told us in the earlier question, you said 81 million is the total Q3 sales. So usually, are we like thinking of like what is the run rate basis? So are we looking at around 50 odd crores coming in? No, it'll be somewhere close to 60-70 crores from coming in from ice cream.
81 million per YTD FY22. So that is overall. So our daily run rate is 1854 liters per day.
So we will look at it at the most doubling in numbers, nothing more, nothing major from there. It's only another offering. We are not concentrating on it as a major value proponent for us.
Got it. Thank you so much.
Thank you.
Yeah, sir, Aniruddha here. I have 2-3 questions. One, is it fair to assume that probably the milk cycle is turning upwards now? So over past 2 years, the milk procurement prices were going down, maybe COVID or closure of Horeca or excess supply or even good monsoons and good flush seasons. So do we see a reversal in the cycle over next 2 years, and only way to means the cost inflation will remain high, and only way to protect margins will be price hikes, and then even after taking price hikes, there might be some downward momentum in the margins. So is it a fair assumption to make?
So downward projection in margins is depending, like I said, a trade-off between what we want as growth in volumes versus the profitability that we want to maintain. As we go forward for the next 2 years, I think milk procurement will start to see an increase. BBK will take it through it. It will either increase, but price-wise, personally, I believe, yes, milk has always had an inflationary cost increasing by 3 to 4% because of all the commodities increasing, be it maize, be it rice husk and all that, as the feed ingredients do go up. It will move up, but the inflationary pressure and price increase, I think as a trade-off, it will be as has been historically. So it won't be dramatically different. The production will come back and it will maintain the status quo.
Okay. Okay.
4% inflation pressure will be there.
Okay. Okay. So coming to second question, now post IPO and with the internal accruals also, the company has accumulated good cash reserves on the balance sheet. So what is the plan going forward? Is there any dividend policy that you would like to work with, or is there any inorganic route also we are exploring for the growth?
Initially, it will be the inorganic growth that we are looking forward. So we will be coming with our policy very soon, where we want to see that we have a certain amount of cash which will always maintain to see whenever we get an opportunity that we should be able to go ahead and take it forward. We are definitely looking forward. We think we will be going forward. We will be moving into coastal Karnataka soon. And like I've been saying, we keep looking for opportunities in M&A and inorganic growth. Dividend policy, yes, another quarter later, we will announce our dividend policy and take it forward from there.
Okay. Okay. In terms of the new products we are seeing is that milkshakes are almost each and every company is launching milkshakes, be it Amul to even smaller companies also. So how do you see growth in that market, and what would be the strategy of Dodla as far as milkshakes are concerned?
So more than as milkshake or flavored milk, we categorize both in the same as a difference in the packaging style that is going forward, which comes with a 12% GST. Now there's been a tussle going on, and there's also taxation that is coming into play. We are going to bet more on the fermented. So I think we'll bet more on the lassi, the buttermilk to be moving more than the milkshake.
Okay. Okay. So these are the questions from my side. Thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Aniruddha Joshi for his closing comments.
Yeah, thanks, Rizan. On behalf of ICICI Securities, we thank the senior management of Dodla Dairy for patiently listening to the investor queries and giving the answers. Now I hand over the call to the management for the closing comments. Thanks, and over to you, sir.
So thank you very much, ICICI and Aniruddha, for organizing the investor conference. As we always say, we are very open, and if any of the investors would like to come over and see one of our plants near Hyderabad or anything, more than welcome. You can fix up a time and you guys can come and have a look at it. And any further information you require, you can always contact Anjan and to get more information. Thank you so much for giving us the opportunity and being on the call. Thank you.
Please write to investorqueries@dodladairy.com. So if there are any further queries.
Thank you very much, guys.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.